Ladies and gentlemen, welcome to this week's version of Nichols and Dimes, our weekly video series. The quote of the week this week comes from Warren Buffett. We quote him a lot, obviously one of the most successful investors in history and is still making news. Well, Warren Buffett is very famous for talking about fear and greed. And he says, be very fearful when people are greedy and be very greedy when people are fearful. Well, obviously, if you've seen the news the last week or so, there's been a lot of stocks in the news, in my opinion, for the wrong reason. And one of those stocks was GameStop. And in fact, a lot of people were talking about it. And when the average investor start talking about stock markets and stocks, when they traditionally don't, you know that stock market is making the headlines for sometimes not the right reasons. So there's a lot of greed right now going on in the marketplace, and I don't think it's a good thing, frankly. Regardless of what you think about short selling and why certain companies took off, at the end of the day, a lot of what we're seeing right now in the marketplace is greed. Usually these types of things where you have irrational stock prices skyrocketing, not based on fundamentals, meaning not based on how well the company is growing their earnings and revenue, appreciating on the stock price, not appreciating on expansion, but really appreciating on speculation. These are not normal times we're dealing with right now. Normally, these things, again, stock prices appreciating on speculation, happen at the end of a bull market cycle. There are other factors that are as well concerning, not only a lot of speculation in the marketplace, but certain metrics like the put-call ratio, which is a contrarian indicator. The put-call ratio basically has lived below about 0.45 the last few weeks. It's one of the lowest it has been historically. What that is an indicator of is that so many people are bullish. In other words, so many people are optimistic on stock prices continuing to climb that they're buying contracts that allow them to buy stocks, to lock in a price at a certain period of time. So again, the put-call ratio, if you follow it, has been, at least most recently, at historic lows. Also something to note, margin debt. So what's margin? Margin is loans against a portfolio. So borrowing money that the broker allows you to borrow against your own portfolio. Well, margin debt is the highest it has been in history. Now, think about this. Back in 2005 and 2006, before the residential housing market took a huge collapse, if you will, there was folks borrowing money to put into real estate. Well, obviously that works when that asset class, whether it's real estate or anything else, continues to appreciate. But debt and leverage is not good when that asset class declines. So again, I'm not saying, well, right now we're going to see what we're seeing, in the equity markets, what happened in the real estate market back, in the financial crisis. But what I am saying is very, very concerning. So my message to you, and if you are a client, we talk about risk management a lot. My question to you is this: do you have a plan or a strategy to protect your money if and when the markets do take a turn south? Again, I talked about some factors that are showing up in today's marketplace that are concerning. So the question is, as I mentioned in a recent video, it's not what happens to you, it's what you do with what happens to you. Do you have a plan? Do you have a strategy? If you are a client, I assure you, I know you do have a plan, because again, we talk about this all the time and we have a strategy and a plan for you. If you're not a client, my question is, do you have a plan? If you would like one and to help develop one, you could send me an email at cnichols@nicholswealth.com or go on our website at nicholswealth.com. Please do not ignore these factors, and there's a number of other factors that is showing some, a lot of greed in the marketplace, which is again very, very concerning. So again, I'm not saying this to scare you. I'm saying this to awaken you about maybe some inefficiencies your portfolio has. Send us an email, and we're happy to help. Thanks again for watching.